Yo, what's up, guys? We're going to be going over some stocks that I think will interest you. One of these companies I just bought another share of on Friday, and another company I don't own, but I'm really thinking about buying this stock. They're on my watch list right now, and that stock I'm talking about is actually Life360. I don't know if you've heard of their app before on the App Store, but they have surprisingly good financials, and they're beating every quarter by a huge margin on their analyst expectations of their earnings. So we're going to be going over Life360. We're also going to be going over Amazon stock is the first company in this video because this is just a great Mag 7 that I think should be part of everyone's portfolio. I mean, if you don't own the S&P 500, I mean, you got to at least own some of the Mag 7 individually. And I'm going to go over Amazon real quick. I decided, if you have the intention like me to literally never sell Amazon, it's worth buying even right here, even at this price. And I'm going to share with you all the numbers. So if you would, please drop a like on the video for me. It really helped me out. And hit the subscribe button if you're new. And let's just get straight into the video. Also, I sell nothing. I have no course. Watch out for people impersonating me, and I'm not an expert. None of this is financial advice. So a lot of people don't know this, but the most valuable part of Amazon is their cloud business, their AWS. It's over $100 billion of annual revenue for them, but that's just one portion of their business. A lot of people know Amazon for their online stores, but that's just one part of their business, and that's fairly low margin. When they ship you a package overnight, they don't make too much net margin on that, but they do make some good margins on their AWS cloud business, their third-party seller services like the logistics fees and stuff like that. They're also a subscription play. Obviously, they collect they own Twitch, so they collect the Twitch Prime subscriptions and obviously the Amazon Prime subscription revenue. And they also are an advertising play. Obviously, they have ads on Twitch, but there's ads on Amazon now. So 7.5% of all their revenue is advertising. They have physical stores. I mean, this is literally an ETF in one. It's an e-commerce play, a book play, a robotics play, AI play, cloud play, grocery store play. Robotics play. I mean, this is a UPS, a Walmart, an Oracle Cloud, and Instacart all in one. So that's why I decided to buy more Amazon. And it's not like this is some company making no money. If we go to their after-tax net income right here, I mean, Amazon is printing money. And look at these growth rates. That's the most impressive part. It's up 35, up 60, 88, 55. At this growth rate, what's it going to be the same time next year? They're also expanding their margins. Amazon used to be a tough buy back in 2022. That's why I never bought them. They were negative margin, a low single-digit margin. But since they're so innovative, they're expanding their net margins. If we go down here, this is the other part I love about Amazon. If you go to their cash from investing activities, this is the money they're spending on like future assets or spending on for the future, to build up their business. They could have bought a company, bought land, whatever. And I love that it's negative like 20 to 30 billion a quarter. Some people are questioning, hey, is this CapEx like with Meta and Google and Amazon actually going to give real returns? I hope so for Amazon. They're also deleveraging. We can see the asset to liability ratio went from 57 to 51, which is good news. There's also some more good news down here. If we go to the weekly news, Jeff Bezos reduces Amazon stake to 9%, proposes space-based data centers. What the heck? So Amazon expends healthcare integration. Amazon plans major HR restructuring. So yeah, they actually just fired 15% of all its HR staff, which is really interesting. But check this out. Amazon strengthens AI and cloud services portfolio. So Project Rainier partnership with Anthropic expected to generate significant revenue and reverse AWS's market share decline. So that's pretty cool. If you didn't know, the most recent quarter, one reason why Amazon fell was because Microsoft Azure took 1% market share and Google Cloud also took 1% market share away from Amazon. So it would be interesting to see they take back more market share from them. So SpaceX reschedules launch of Amazon Kuiper satellite. So yeah, Amazon's also a satellite play. So yeah, that's why I bought Amazon. It's just an innovative, growthy company. And I actually like the fact that they don't pay a dividend. Actually, if you didn't know, every other stock in this portfolio pays a dividend. Also, if we go to my Robinhood portfolio right here, this is known as my dividend-only portfolio. Literally every stock in here pays a dividend, and every stock in here pays a dividend as well, except for Amazon. So I'm fine with Amazon not paying a dividend, and I'm also fine with them not doing any share buybacks just because they're investing so much into the future. And it's working. Like the law of large numbers, it doesn't matter for them. The revenue was 150 billion. It still grew to 167 billion. So revenue's up 13, but net income is up by 35. Of course, meaning they expanded their net margins from a 9% to a 10%, which is huge. That 1% extra net margin is huge when you're literally doing 167 billion of revenue a quarter. So anyway, there's my pitch for Amazon. Obviously, I'm biased because I own them, but I own them for a reason, and I just bought one more share on Friday. So that's Amazon stock. Now, for this next company right here, this is Life360 software play. They've been struggling the past couple days here, and there's really no news to like justify this. It's just momentum right now. And honestly, they are still, even right here at this price, pretty expensive, pretty overvalued. But if we go to their numbers right here, check this out. The orange lines, what the analysts expect every quarter, or this quarter, they beat on revenue. They were expected to lose net income, but for the past 3 quarters, they've been making net income and making good EBITDA, beating on expectations. But here's specifically their website right here. This is their most recent quarter. They said their monthly active users reached approximately 88 million, up from 25% year over year. So, their most important metric, their monthly active users reached 88 million. Record Q2 global net additions of 136,000 paying circles. Total quarterly revenue increased 36% year over year. Annualized monthly revenue increased 36%. So, and the full year outlook in revenue and adjusted EBITDA raised based on year-to-date performance. So that's what's pretty cool about this stock right here. So if you're wondering what is Life360, it's basically an app where you can track what your friends do. But mainly right now, the CEO said we're seeing a rise in what we call the anxiety economy. So customers, if you're wondering, parents use this to track their kids, but what we're recently seeing is at school, I see a lot of friends just use this with their other friends just to see what they're doing and what they're up to. It tells you what percent their phone is on. It's just, I don't know. It seems like a lot of people are using it recently. So let me get into their numbers right here because they just got profitable. They're really growthy. If we look at the revenue's up 35%, after it grew 19, after it grew 44, after it grew 93. So they are on a growth streak right now, and they're finally making real GAAP net income. If we go to their net income, it's almost 10 million every single quarter. And at this growth rate, what's it going to be the same time next year? Again, they're really expensive, but the reason they're gapping up on earnings is, again, because they're beating on analyst expectations. Even though they're really overvalued, analysts are still expecting these numbers. They're beating like crazy. So we want to see them continue to beat on numbers. Now, one thing that is interesting is they did just issue some debt, but it is no big deal. We can see that right here. They have $432 million of cash. And if we go to their income statement right here, they still actually made interest on this. So they made 4.62 million of positive interest. So yeah, if we go to their actual operating profit was 2 million. Again, this doesn't include taxes and this doesn't include interest that you make on your cash. So that's why when we go to the operating profit, it's 2 million, but the GAAP net income is 7 million again, because it includes that interest. So they're still making positive interest every quarter. So it seems like the right move. I love their cash from investing activities. They just spent basically 27 million buying a new asset. Their cash from operating activities is growing. Basically, that's the FCF, which is free cash flow. Yeah, 10 mil a quarter now. So gross margins, 78% gross margins. Again, they're just now getting net income positive, but not too shabby. That's why I put Life360 on the watch list. I like their numbers. That's what I like about them. And their app seems pretty interesting. I wouldn't have it as a huge size position, but they're definitely interesting. One thing I know is that if you look at any of these subscription model app store app stocks like Spotify, Duolingo, Netflix stock, they all trade at really high valuations. And that's why I think Life360 trades at a high valuation and will probably continue to. And they're also really growthy, they're the new kid on the block. I really like them. And one other interesting little tailwind I was reading an article about is Apple right now. If you pay for the Spotify subscription through the App Store on an Apple device, 30% of that money literally goes back to Apple. They have a developer fee of 30%, but that's coming to an end almost right now because on the App Store or on the Spotify app, they weren't allowed to direct you outside of the Apple App Store to buy the subscription, but now they can. On Clash of Clans, whenever I go on the app, it's pushing me. They're forcing me basically to buy, if I wanted to buy anything, to do it on their own website instead of through the App Store, so they don't have to take the cut anymore, and the margins therefore are going to go up in the future. So that's an interesting tailwind for the future. They'll be able to make potentially 30% more. Apple got into some trouble with what's that name, Patreon, because Apple wanted to take 30% of Patreon's money, so Patreon had to raise the price. There was a whole big shenanigans about it. But yeah, guys, that was the video. Hopefully you found some value in this one. That's why I decided to pick up Amazon, and I now have Life360 on the watch list. They're trending down a little bit right now. So hey, maybe you could put them on the watches, maybe nibble at their current price, but I wouldn't go full size position in this one yet. But I really do like their numbers, and there was some sort of good news on this day. I wonder what that was. But anyway, hope you guys have a great rest of your day. Please check out this video up here and drop a like on the video if you haven't already. See you in the next one.